Request you all to please get seated. I'm Sukriti Sekhri from IIMA Ahmedabad, your host at Gold and Gold Markets 2019. I extend my gratitude and a very warm welcome to the respected dignitaries, colleagues from the gold industry and academia, and to the professors who have come all the way from Ireland and Australia and closer home from Ahmedabad. Your presence reaffirms your support for the work that India Gold Policy Center at IIM Ahmedabad has been doing. We are beginning on time, and we expect more delegates to join us as the conference progresses. So I would request those people seated at the back to kindly come forward so that those who join in late can walk in from the back. Thank you. So we will begin today's proceedings with the lamp lighting ceremony to invoke divine blessings. I would like to welcome on stage the respected dignitaries, Shri K. Rajaraman, Additional Secretary, Department of Economic Affairs, Mr. Soma Sundaram, MD and CEO, World Gold Council India, Professor Arvind Sahai, Professor of Marketing and International Business at IIM Ahmedabad and also Chairperson of India Gold Policy Center at IIM Ahmedabad, Mr. Mrugank Paranjpe, MD and CEO of Multi Commodity Exchange India Limited, Mr. Rajesh Khosla, Chairman Emeritus, MMTC PAMP, and I would request you to join us for lighting the lamp, please. As the Sanskrit shlok goes, Shubham karoti kalyanam, arogyam dhana sampadaha, shatru buddhi vinashaya, deepa jyoti namostute. I fold my hands before the light that brings prosperity, auspiciousness, good health, abundance of wealth, and the light that destroys darkness. May I request Shri Rajaraman, Mr. Soma Sundaram, and Professor Sahai to stay back on stage, please. I now invite Professor Arvind Sahai, Professor of Marketing and International Business and Chairperson of the India Gold Policy Center, IGPC, at IIM Ahmedabad, to please give the welcome address.
Good morning, everyone. Thank you for coming in on a Saturday morning at 9:15 for us to get on an early start. This is our first time in Delhi. The last year we started this conference in Ahmedabad, and in Ahmedabad we start at 8:45. So actually we are starting half an hour later than usual, which is a concession to Delhi, Mr. Khosla. Welcome to all of the delegates who are already here. I see some familiar faces from last year also. Let me start off by kind of sharing with you a little bit about the India Gold Policy Center, the purpose of this conference, and what we hope to get out of it. As most of you know, the India Gold Policy Center was established 4 years ago, on December of 2014, and has been in operation since that time with the purpose of acting as a think tank, research center, policy advisory for gold in India. The initial funding was from the World Gold Council, though we act as an independent center for research and thinking and policy advisory. As part of our remit, we would like to be able to create a forum, a group of people, a platform for research related to gold. Part of the reason for that is that India for India, gold is a fairly fragmented kind of an industry with not enough research-based insights which are available, and especially independent research-based insights which are available for all industry participants and policymakers to be able to draw from. Because of the fragmentation, there tends to be a tendency for viewpoints and data which comes from a particular sector rather than looks at it in an integrated, impartial manner. And so for us at India Gold Policy Center, that's part of the remit, to be able to provide the platform, to do research ourselves, and also to be able to provide the platform. And this conference, essentially, we hope evolves over a period of time as an annual conference that becomes the conference for people who are interested in serious research, both people from academia, professors and researchers, and people from industry who would like to be able to showcase their research, also learn from what is happening, and get insights both from the perspective of what are the possibilities, what are the nuances, and what is new that is happening in research related to gold that can actually be used on both sides. I should also share with you that the India Gold Policy Center not only does its own research, so we have a nucleus of faculty at the institute who are involved in doing research related to gold. One of them, my colleague, Professor Joshi Jacob. Joshi, if you can raise your hand, is here. I have a couple of other colleagues as well. So we do some research which comes out of the policy center at the institute, but we also engage with researchers around the world, in India for sure, but also people from outside who are interested in doing research related to gold. So there have been people from IFMR in Chennai, from XLRI in Jamshedpur, Indian Institute of Technology, Kharagpur, who have given us good proposals on research in gold, which have gone through a double-blind review process on whether that research is good, solidly conceptualized, and can fit the parameters of what we would like them to do. And also we have very recently engaged with Professor Dirk Bauer also, who's sitting right here with us. Thank you, Dirk, for making the time to come here. And we hope that we are able to increase the scale and scope of such collaboration with researchers on gold in the country as well as outside. So let me stop there and kind of wish you all again very good morning. I hope you had your coffee, because now the serious stuff is going to start. We have for our conference this time one of the leading researchers in gold who has come to grace this occasion, Professor Brian Lucy, who's sitting with us. And our keynote speaker today is going to be, from a research angle, is going to be Professor Brian Lucy. I would also like, again, to extend a very warm welcome to Mr. Rajaraman, the Additional Secretary in the Ministry of Finance, Department of Economic Affairs, that is charged with the well, amongst many other things, the investment division is also looking at a policy for gold for India. And we do hope, sir, that sooner rather than later, there is a cogent policy for gold, given the events which are happening around the world, and just for the sake of the health of the industry and the future of the industry as well. So thank you very much, everyone, and a very warm welcome. And I look forward to some interesting presentations, research presentations, and to increasing the scale and scope of our engagement.
Thank you very much, sir, for sharing the work that IGPC has been doing and your vision for the same. I would request Professor Sahai to welcome Sri Rajaraman and Mr. Somasundaram with flowers. Thank you. I now invite Mr. P.R. Somasundaram, Managing Director of the World Gold Council India, to please address the delegates.
Very good morning to everyone. Mr. Rajaraman, thank you very much for being with us today. And Arvind, thank you for putting this together. This is the second conference since we had one last year at Ahmedabad. And I'm very, very pleased as the World Gold Council, who have worked with IIM Ahmedabad to create this idea of a policy center for India on gold. Just to give you a little bit of background, when about 5 years ago, when we started looking at the gold industry, that's when I joined the council as well, realized one thing, that there is no body of knowledge. There is so much knowledge, but there is no one actually putting it all together in a manner that it can be used by the policymakers, it can be used by the industry. It's all over the place, because there's a very, very vibrant industry in India. The jewelers and the traders, they have so much knowledge, but it is absolutely not processed in a manner that it could be used. And then when we started discussing with IIM Ahmedabad, and particularly Arvind, it took us a year to come out with this concept. The Policy Center has now been in existence for more than 4 years, and I think it has grown from strength to strength. We are very, very happy to see the people getting involved in gold as a research area. And we do believe IIM Ahmedabad has much bigger plans to make this center the a center of excellence for gold, and not just purely on research, including on giving opinions on matters of context, reason context. So I will not take much time other than to say that as the council, people do ask questions often. What is your interest in policy for India? Now, what's your locus standi? And this is what we do. We, as you all know, we are a gold body, but we are non-profit, and we do this kind of work in China. We do this in other parts of the world, and that's what we do in India. We are interested in making sure that the second largest market, which is Indian gold market, actually is more transparent, is also does not cause a problem for the government in terms of its macroeconomics, and is able to actually benefit the consumers and the people in the ecosystem, the jewelers, the traders, etc. And what we thought was, what better than to put the best institution in India to work on it and suggest to the government what it should be doing, and also to the trade, how it should be there. The whole idea of this policy center, again, as I said, the center is just now, in a sense, gaining attraction, is to ensure that the body of knowledge, both traditional and modern, and something which we have yet to see, including the technological advances, are actually processed in a manner that the industry can put it to use. So I'm very, very pleased to have many of the people now traveling all over the place to come here and speak to us. I'm very, very keen to listen to you. So I'm not going to take more time, but welcome to all of you, and I do look forward to a day of great deliberations. Thank you very much.
Thank you, sir, for setting the tone for today's conference. Our distinguished chief guest for today is Shri K. Rajaraman, an IAS officer who is the Additional Secretary, Investments at the Department of Economic Affairs, Ministry of Finance, Government of India. He also serves as India's Director at the BRICS New Development Bank and on the boards of ECGC as well as Export-Import Bank. Shri Rajaraman has held various positions of responsibility, including the role of Joint Secretary, Public Finance Central, Department of Expenditure, Ministry of Finance. He has been the Commissioner for Commercial Taxes, Government of Tamil Nadu, as well as the Managing Director of Chennai Metro Railways during its entire planning and implementation phase. Sir, it is an honor to have you here with us today. I'm sure the audience is eagerly waiting to hear from you, sir.
So, morning to all of you. I think especially Professor Sahai and Mr. Somasundaram and the entire team of body of researchers who have assembled here. And so, first of all, welcome to Delhi, and thank you for coming for this conference. So, as I would like to first of all congratulate Professor Sahai for setting up this center and creating interest in a topic which is quite old, and I think in that sense of the term, but where, as he says, the body of research needs to be expanded and widened so that we are able to make better policies, and not only from the part of the government, but also for the use of the industry and other stakeholders in this sector. So, what we have seen from the government, I mean, I think the government, especially from the Department of Economic Affairs, from where I come from, we are very keen to look at gold in a particular aspect of gold, gold which behaves like a financial asset. So, though I guess the government-wide role is to enable gold to flourish as an industry, create jobs, create the economic multiplier effect, and so on and so forth. But the Ministry of Finance has got a limited role, and I would like to say that our focus has been largely on the financialization of gold. Rather, the emergence of gold as a financial asset class has been our endeavor in the last several decades, to say so. But as we started the process of policy making in the last several months, I think I must first of all say that Professor Sahai and Mr. Somasundaram, Mr. Khosla, and many other people here have been very helpful in affording a number of suggestions, ideas, and sharing their experience. So in this process, we could discover that as Mr. Somasundaram rightly said, there is a lack of reliable and rigorous studies in this sector. And I think because I myself must have browsed maybe about 50 to 60 papers in the Indian context, which are whatever is available in the public domain. So what I would feel is that a lot of work needs to be done. Really, a lot of work needs to be done. And perhaps my request to IGPC would be to kind of not be a research body by itself, but also to support this research in various other like-minded bodies across the country. And I think, like for instance, establish a network of researchers. I'm sure that this is this is what it aims to. But nevertheless, if there are other research institutions which can probably also join hands within the country, I'm sure that in some time from now, we will have a substantial amount of knowledge that emerges, which can be used for policy making, course correction, and for making business decisions, and so on and so forth. So, from our perspective, there are several issues that probably need to be addressed or maybe looked into in order to make better policies. Like for instance, one of the biggest issue which we are concerned with is obviously what could be the incentives for public to actually put out the gold and convert them into financial assets, instead of locking them up in their cupboards and safety lockers and so on and so forth. So the government has been working on it for the last couple of decades. A few schemes have emerged. I wouldn't say that they have been very successful. I think rather they have been very, I would say, very close to failures. I would say. So probably we haven't really understood how the consumer behavior, in that sense of the term, and as to how what makes them work and what makes them move and so on and so forth. Obviously, gold has got a lot of emotional attachment compared to the vast quantities of gold held as jewelry or antique stuff which has been left as heirlooms or whatever. So, but nevertheless, there is a equally large quantity perhaps which could be converted into financial assets. So why, what more incentives could be built into the system, into the financial systems to enable gold to be financialized is a question which still I think remains to be fully answered. So we are in the quest. I think having various conferences, meetings with all the stakeholders like all of you, and picking up some of the points, and then trying and make policies which are a little ad hoc, I would say, not truly evidence-based. So therefore, I would feel that maybe the conference should look at this very, very key aspect of consumer behavior and try and find out what kind of incentives could perhaps enable this financialization on a much bigger scale than probably what is happening now. The other question, there are several other questions, like for instance, the question of regulatory policies, for instance. I think this is another area where what kind of regulatory policies could perhaps enable gold to flow through the system like currency. I think so. This is something which there have been a few issues which have been identified. I think from the regulatory perspective that probably constrains banks from from taking up gold as one of the mainline financial assets and one of their mainline products which they offer to the consumers. And I'm sure that the policy which we are proposing will certainly address a lot of that, because we hope that the consumer should be offered choices in terms of investment products, the kinds of, because many of them have got different requirements, different constraints, and therefore they are each kind of or each category of consumers would like to, have their problems answered in the form of an investment product. So therefore, we feel that the bouquet of products that are currently available in the market need to be substantially enlarged to enable consumers to put the gold into such kind of products. So this is also a question which probably remains, I wouldn't say fully researched, and why some banks, some countries are able to provide a variety of products which have been widely subscribed to, whereas here in India, I think some banks are providing some kind of products, but now obviously there is a regulatory overhang which probably prevents a lot of that. And so what needs to be done is another question which probably needs to be looked into. There are several other areas, like for instance, where there's a clear need. There is no need for a policy to actually address that. But like for instance, say making the gold trade much more transparent and effective. Obviously, issues like standardization of gold, and having a centralized electronic spot trading system, an exchange, and so on and so forth. These are all well thought out suggestions which I think we are working on, and I'm sure that these will certainly find traction once the government takes a call on that. So even these, I think, let's for instance, let's take the case of banking, for instance. So world over, if you see, banks, deal in gold as part of one of their products. I think there's no exclusive bullion bank. The best of my knowledge, I think I would like to stand corrected. But if you look at it, I think so the choice here is that whether we need to have a standalone bullion bank or whether we can have the existing bullion banks, the existing banks supported to create divisions, which are deal in precious metals and so on and so forth. So there are a number of policy options which are available. What kind of policy options do we support? So these are some of the things which we would like some of your research to address, by documenting experience of other countries. If you look at gold, I think the experience that is available in these kind of sectors is quite limited. I think we have examples from China, we have examples from Turkey, maybe from London, and from the UK, and so on and so forth. So then, unlike the other sectors, financial sector, for instance, or capital markets, for instance, gold, certain aspects of gold are limited to a few countries where I think effective policies have put in place, have created deeper markets which are worth emulating from our perspective. So we would like those documentation, studies of those countries also to, I think I'm sure that could be used effectively, and a comparison with India and what could work in India and what would not work in India. These kind of studies could also help in ensuring that the policies take the right route. There are also other issues, like for instance, gold as part of the monetary reserves. I think so many countries abroad which are building substantial pile of gold as part of the monetary reserves. So is it a good policy? And is there? Especially in this aspect, I find there are very few papers. In fact, I couldn't lay my hands on more than a couple of them. So obviously, gold is something which is being used as a monetary reserve in many countries, many countries. But unfortunately, it's not so well researched subject. So this is an area where probably our regulator, the Reserve Bank of India, may require a lot of guidance. So there needs to be more robust studies in different country contexts as to because obviously managing reserves is a very tricky subject, and probably regulators need to have a deeper understanding, and therefore more studies are called for. So this is yet another area where probably research is called for. We also have some other areas, like for instance, the mining and exploration in India. I mean, this is something which, I mean, people always say that, it is the policies in India which perhaps have not led to more discoveries. So there needs to be also an examination as to whether the mining policy in the gold sector needs to be tweaked to enable more of exploration, and whether there are untapped reserves which could be tapped. I mean, I think, for instance, we could take the case of China, which has substantially grown its domestic production, I mean, because of certain policies which they have put in place. So this is also an area where perhaps we would require a lot of guidance. So with these few words, I mean, obviously, from the government perspective, it is just not about whatever I have just talked. I mean, I think I'm sure that the more important issue is about how to harness the gold industry in terms of creating jobs and creating the economic growth that this country deserves. So in that context, maybe I think there are some areas like, for instance, our own taxation policies, our agreements with other countries in the form of FTAs, and so on and so forth, taxation agreements, double taxation avoidance agreements, a number of arrangements between countries which have actually led to some, have affected the growth of the industry. So therefore, these are also areas of research. I mean, I think I'm sure that how the taxation policy, the policy on the agreements between the countries like FTAs and so on and so forth have had impacts on the gold industry in this country. So we would also like research to be also directed to some of these, so that to look at how as the potential for creation of more jobs in this country. So with this these few words, I would once again congratulate Professor Sahai, and we'll be very happy to continue to deal with IIM and its IGPC in furthering the cause of bringing out more evidence which can support more robust policies. Thank you.
Thank you very much, sir, for sharing your thoughts on the steps to be taken, both at the government policy level and by researchers. I'm sure it will be an endeavor of IGPC to meet the goals that you have set. Ladies and gentlemen, I now have a very special announcement. It is for the first time that we have instituted a global recognition for excellence in research on gold for academia and researchers at the GGM. This, however, would not have been possible without the support of MCX India Limited. A very special thanks to Mr. Mrugank Paranjpe, who was extremely forthcoming with his support to this initiative by IGPC at IIM Ahmedabad. Without further ado, it gives me immense pleasure to announce the winner of the MCX Award for Excellence in Research on Gold, Professor Brian Lucy. Professor Lucy is the Professor of International Finance and Commodities at the Trinity Business School, Trinity College, Dublin. He is the editor at various journals of repute, including International Review of Financial Analysis, International Review of Economics and Finance Research Letters. Professor Lucy has published over 100 peer-reviewed articles in a wide range of areas, including international finance, behavioral finance, and commodities. Professor Lucy's publications on precious metals, gold markets, and investor behavior are creating impact in both academic as well as business circles. His papers have been widely read and heavily cited, including the article, "Is Gold a Hedge or a Safe Haven? An Analysis of Stocks, Bonds, and Gold," with more than 800 citations. I now request our chief guest, Sri Rajaraman, along with Mr. Mrugank Paranjpe, CEO of MCX India Limited, and Professor Arvind Sahai from IIM Ahmedabad, to please present this prestigious award to Professor Lucy for his exemplary research in gold and precious metals.
Thank you. Great. Congrats, Professor. Thank you very much.
Congratulations, sir.
Thank you.
Thank you. Just keep it down.
There is a slight shuffle in the program as the additional secretary has to rush for another meeting. So we will have the first panel discussion of the day, followed by the keynote address by Professor Brian Lucy. Before we begin, a special thanks to Sri Rajesh Khosla, Chairman Emeritus, MMTC PAMP, who has agreed to be observer of the discussions through the day and to give his closing comments. I now request the moderator for the first panel discussion of the day, Mr. Somasundaram, and the panelists, Mr. Rajaraman, Professor Sahai, and Mr. Paranjpe, to begin the panel discussion on the way forward for gold policy and the next steps. Thank you.
Where we had a report on the India gold policy from Niti Aayog, which is the think tank for those who are coming from out of the government of India. And we had a set of recommendations, something like 87 recommendations which have come in. And so the question is basically, what are the next steps? You have made this clear in certain other conferences, but even in this budget, you said there is a policy being written and there was an update given to the parliament. So we just want to know where does this stand in terms of Niti Aayog report and what the Ministry of Finance is wanting to do in future.
So just to understand, I mean, I need to give you a little bit of the background. I mean, the government of India has been seized of this issue of how to incentivize the holders of gold across the country, be it individuals or say institutions like temples and so on and so forth, to invest in gold-based financial products. So the government launched in '99 the gold deposit scheme, and so for instance, so over a period of say about 10 years, 15 years, I think it's hardly gathered something like say 15 tons of gold, I think, so which I would class as a very poor achievement. Then subsequently in 2015 it launched the gold monetization scheme, which was a little a more appealing kind of a format, but unfortunately that also did not take off. I mean, we have hardly been able to collect about something like 15 tons, get invested into the various schemes under this program. So in the last couple of years, there has been a growing recognition that we are probably trying to fix a part of the system without looking at the system as a whole. So therefore, we felt that there is a need for a wider policy which would cover the interface of gold with various aspects of the financial system. So therefore, the finance minister announced in last year's budget that a policy would be announced, and also along with that, a gold spot exchange would also be conceived and put in place. So therefore, in a sense, I think the effort has been to look at the problems of gold, as a financial asset in a system-wide basis, and therefore issues like say the spot exchange, the bullion banking, sufficient incentives for the public, or maybe modified or more attractive incentives for the public to deal with it. Incentives for the banking system, the financial system to adopt gold as one of the products that could offer to the public. So these are the issues which are being addressed in this policy. So we expect that the policy would be able to address several of the issues, not just one of the issues of just consumer behavior, I think. So that's in short.
Okay, thank you very much. Mrugank, coming to you, he did mention about the exchange piece. Where do you think, from your point of view, you have been in this industry now for quite some time, you're handling one of the major exchanges. Where do you think is the gold trading, the organized trading part, where does it stand? How do you think it will support the industry? Is it necessary at all to have a spot trading platform in India?
So, I guess my answer is a bit biased because I run an exchange. So I'm not going to say it's not needed, but let me just say why. I think with a history of about 15 years on trading on our exchange, one thing we found is that if you are able to give a couple of things, one is a transparent price discovery, second, a very robust investor protection mechanism, and third, a very good regulatory oversight. Those are three fundamentals which actually develop a robust marketplace. And I think in the sense of creating a market for spot, that is absolutely necessary. So we've had mishaps where we've had unregulated sort of exchanges come in the country. And I think that is something which none of us want. So I think looking at the propensity of people to buy gold in India, and this is at a very, very retail level, I think what we need is a very good price discovery where people will know that they're getting the right price. And if that has to happen, you need a fairly widespread national level exchange. And that's why I believe a spot exchange is a necessity today.
Right. Arvind, let me turn to you. You have been working on this now for some time. Are we very clear what the principles of this policy need to be? What I mean by that is, what are we intending to achieve by this? Is it just bringing out the 25,000 tons that are held? Should that be the focus, or is it something greater? What do you think should be the primary principles driving India's gold policy?
That is for the government to decide. But
no, but what would you suggest to the government?
From the perspective of an academic and as a citizen, to me the points of concern are our currency depends, the stability of our currency depends somewhat on the current account deficit, and we are a persistent current account deficit country. And in any given year, the second or third largest source of the current account deficit is gold, because we import almost all our gold. So clearly that is one thing that will drive policy. Second, and associated with the first, is the issue of taxation. Right now, the current taxation structure tends to encourage a certain level of smuggling of gold into the country. Estimates vary from 100 to 200 tons. I think nobody really knows for sure, but it's a very substantial amount. And third, because of the fragmentation and lack of a sufficient scale amongst the organized players, because it is so unorganized and there's a lack of data, there is a lack of transparency which prevents the industry from getting scale. And the last one is that we export gold, but we are largely exporting to the diaspora, Indian diaspora outside. If one wants to be able to send gold to Italy, or have Italians buy gold designed in India, or Americans buy gold designed in India, we are not yet there. So those are likely to be the 3 or 4 major criteria that should drive the policy. The price discovery part is an integral part. I think that will allow the industry to become more transparent. The Shanghai Gold Exchange, for example, has transactions. The spot exchange has transactions, if I remember the numbers correctly, of more than 14,000 tons per year. Not that 14,000 tons are actually passing, but the value of the transactions is equal to 14,000 tons. I'm guessing in terms of the actual tonnage of gold which flows through might be 400, 500, 600 tons. But because it goes over back and forth so many times, that's 14,000 tons. Our market is nearly as large, and so therefore a spot exchange like that, which has that level of liquidity, should be able to lead to a price discovery, which is then transparent to everyone. Price discovery by itself probably is not that important. Probably what is more important for us is that it will lead to a transparent price level which is available to everyone. Just like in the agriculture industry, the farmer can now just log into his mobile phone and he can see the crop price on the CBOT, Chicago Board of Trade, And when he goes to the local mandi, he has more information. Similarly, the consumer will have more information when there is a spot price that is visible to everyone, and that makes that has a systemic influence. And the last thing, as Secretary Rajaraman rightly referred to, was a systemic view that all of these needs to be integrated. If we want to get out, Turkey has got around 3.5% of the gold out, of the private gold out. WGC estimates suggest that there's 24,000 tons of private gold. If there's 24,000 tons of private gold, 3.5% of that is 960 tons. That's 1,000 tons of gold. 1,000 tons of gold will be 300,000 crores, which is like nearly how much in billions of dollars? About 40, 50 billion dollars. That's a substantial amount of money that's being unlocked to flow in the economy, and that then becomes available for investment purposes, for more productive purposes. Of course, as Brian and I were discussing a little while earlier, Indians are attached to gold for lots of reasons. So part of the incentive mechanisms, I suspect, sir, what you referred to earlier, will also depend on how we are able to design something for individuals to help them part with their gold, because otherwise, as individuals, one may not be really eager at all for perhaps understandable non-rational reasons. Though neoclassical economists may not like the idea, but for understandable reasons, people will not deposit it. One issue clearly is the taxation issue. So unless the government is willing and able to coordinate with the Department of Revenue, that there is a very clear statement that people who are depositing gold under these conditions, this is what it's going to happen. So because without that lack of clarity, given the attachment of gold to gold, there is going to be an issue. Our last paper was in 2016, the IGPC paper, which looked at consumer attachment to gold and their attitudes towards gold. We surveyed, again, if I remember the numbers correctly, around 1,200 households through the different parts of the country, north, south, east, west. And the conclusions were pretty clear that people will not part with their gold unless there are very clear mechanisms and incentives for them to do so. And that has also got to do with the banking system, as you very rightly said.
Thank you. Just so people are aware, I'll keep this for the next 25 minutes, and then we will end up, and I will certainly have people from those sitting below to also answer. I want to rope in Rajesh and the exchanges and the bullion bankers there. But before that, let me just add to what Arvind was saying. Yeah, sorry. One of the things about the policy, which as the council we have always maintained, is that there should definitely be a focus on the monetization piece, but it should not be the only focus. If India gets 1,000 tons today from the monetization scheme, so it is a 1 year's demand. Does it solve all our problems? No, it does not. So I just want to make my points as the important thing is this industry has definitely given employment to a lot of people. We don't know how many, that's the real fact. What we don't know is, for every dollar we spend on gold, unlike any other investment, we do not know what is the value addition to the economy. That's the fundamental problem. If we really know that this is driving employment, it is driving value addition, it is driving economic value addition in multiples of 2, 3, whatever it is, I think then it will be easier for the government and the policymakers to do so. Currently, we all know a lot of people are employed. We don't even know how many millions. If you ask each association, you will get one different figure. Somebody will say 10 crores, somebody will say 2 crores, etc. And we also don't know what exactly is the employment intensity of this import. That is the key issue. So it is not, every time this monetization thing comes up, we always caution, saying the overwhelming focus of India's gold policy should not be just the monetization. We have already actually monetized 900 tons. People are not aware of it. How have we monetized it? You go and ask how much of loan against jewelry has been taken by people who otherwise are not banked or bankable. That's $32 billion already sitting as collateral. So we can probably drive that up. So our point is overwhelming focus on monetization should not be the policy objective. The institutes such as the Gold Policy Center should actually say what is the value addition of every dollar that we spend on importing gold. That has to be first explained. Now how that is to be explained, that's for the experts like those who have come here to answer to the government. The second important thing is, you see, one of the things about gold here is because it is a traditional industry and this often spoken myth that Indian women love gold, India will always be attached to gold, we just have to just move away from that. It is, yes, Indians love gold, but we loved gold for various reasons. There was a time when there were no other financial asset classes. If you go into the 80s and 90s, this was the only luxury item. If you have some money, you would always invest in gold. I'll just give you a small example. I'm sure many of the people from the industry would know. Years ago, we used to be the sponsors for Bridal Week. Bridal Week was always a gold thing. Would you know who is the main sponsor? We couldn't even compete. Of course, we are now moved away from this. It's BMW. So we just have to understand that gold was a luxury item in days when there was no other luxury. Today, it is not. And the government has the figures to prove that. Gold was the second largest import commodity. Now it is electronics. So, the facts are there just before us. That is why, institutes such as this will have to probably answer it a little more, what I would say, differently from all of us, which I'm sure you're doing that. Coming back to the policy part, we believe that the industry has grown. It has got a lot of employment. There is no doubt about it. But we still believe that innovation and therefore, the value addition through gold is still very limited. Jewelry does an excellent job, jewelry trade. Yet, at the point of sale, it still sells gold. It does not sell jewelry. It is absolutely, all the excellent handcrafting is reduced to the quantum of gold you are transferring to the lady. It is not the brand, it is not your handcrafting. Again, that is something which needs to be studied. Why is the value addition getting destroyed? I used to be in a different industry earlier. It used to be the same problem. All the back-end work, and then you put the ice cream at the point of sale, and the guy keeps the ice cream open, the cabinet open. It's all melted. Okay? So you have to change the mindset at the point of distribution. It's the same thing here. So policy in India has to be looked at differently. Innovation is another thing. Artificial intelligence, how do we bring that in designing? Modular jewelry, why, things like that have to be spoken. The point is, we don't have established organized bodies talking about it. We still are stuck with taxation and, and in my opinion, we still are seriously stuck in monetization. So now that's my thing. We don't have standards. I mean, this is the one industry with $35 billion, I'm sure Rajesh will add to it, which has no standards on anything, which does not have infrastructure. Of course, we spoke about exchange. So I think we should probably look at internally to see how gold can add value rather than just be stuck with one or two things. Now, I'll just invite with Mrugang, please feel free to add and question people. You have one of your exchange persons sitting there, Patil there. But I'll come to Rajesh. Rajesh always has been very, what I would say in very quick terms, he always says, what is to be done in this industry? Rajesh, if I may just drag you in, if there were three things that we should be doing as part of the policy, what would you recommend, Rajesh? I know you have given recommendations, at various forums, but what would you think? Can I just drag you in? And then, we'll just go to a few others. Is that all right? Yeah.
I can do it wherever you like.
You can come here, you can speak from there, whichever way, Rajesh.
I think I'm happier.
Yes,
yeah.
please.
That's your fault. Okay, before I go on to those 3 items on the wish list, you've been mentioning about value addition in gold. Now, let's look at the value addition in the entire gold value chain. Duty paid gold imports into India for domestic consumption, 550 tons. $40 million a ton. You go to a Tanishq and he says, I'll give you gold jewelry at an 8% value addition. So your ballpark figure for value addition for gold in India is $1,760 million. It's very simple, 550 into 40 into 8%. That's it. Add another 1% because you now have refineries. So you're looking at a ballpark figure of $2,000 million value addition that gold brings into this country. Across the value chain, I'm not looking at jewelers, I'm not looking at refiners, I'm looking at, this is the plus. Is it worth it? Is it not worth it? IGPC can do a study on that and figure out what needs to be done. So that's the value addition bit. Now, 3 key items. I'll first put on my refiner's hat because I believe it contributes significantly to value addition. But more importantly, it's a great incentive for mining in the country. When you know that there is accredited refining within the country, the miner feels that much more comfortable. He doesn't have to worry about where he's going to send his product to be refined. Therefore, I would say, look at the link between refining and domestic mining. Study what's happening in Australia, study what's happening in China, look at what's happening in Canada. Devise a policy, and this is, I have to take you back many years ago when we had this big debate on hydrocarbons. And India was hopelessly dependent on import of hydrocarbons. And the government came out with a liberalized exploration policy. And you're seeing the success of that now. You are seeing more than 25% of India's hydrocarbon is being exploited locally. It wasn't the case 20 years ago. Is this a story for mining? So I would say mining, refining, for me that's number 1 on the priority. If you believe gold and the foreign exchange you spend on gold is a problem. That's 1. Number 2, of course, you have to look at employment because we're a country where employment is critical to whatever we do. Therefore, anything that spurs employment, and gold, I think, is pretty much high on the list. What do we need to incentivize employment is an issue that needs to be addressed. Finally, of course, you talk about standards and relevance, but I think a lot of this will kickstart when you take a call that actually I can do two-way trade in gold. I can import gold, I can export gold. Why is it that I'm only importing gold? If you have a two-way trade in gold, a number of issues that you're currently grappling with, including what Arvind mentioned about Italy and gold and so on and so forth, are just going to disappear. So that's my wish list. That's my 3 wish lists. Thank you.
Can I just add a supplementary question here, which I think that I also met one jeweler here. Do you think the industry is doing enough in terms of gold? Yes, it sells a lot of gold, but we always go to the government and say, write a policy. We don't even know why we want a policy, honestly, in many forums.
Unfortunately, most of the players in the gold value chain, and I'm going to be crucified for this one, but I'll say it anyhow, whether it's the banks, whether it's the so-called refiners, whether it's the jewelers, don't really care. And that today is the problem with gold. The problem with gold is it lacks transparency. And I always ask this question, 2007, when we took a call that we would set up a state-of-art refinery in this country, the entire industry, and quite a few sitting around here, laughed at me and said, you must be crazy. Well, we've proven to you it can be done. And I would throw this challenge to anyone in the gold value chain, whether he's a bank, whether he's a so-called refiner, whether he's a jeweler. Guys, get your act together, come up to standard. Whatever your standard may be, do it. Stop coming to government and saying, I need this help, I need this help. First put your house in order, then go out and say, now I need some help.
Let me bring Bombay Stock Exchange here, Sir Patil. You have been interacting now very closely with the industry, particularly the last 3 years. What do you think? I'm not talking specifically here about the spot exchange, because I know that you and, the rest of the exchanges are experts in that. I'm just asking you, as an outsider, when you stepped in and you saw this, how do you see this industry changing or not changing? How do you see them? Are they stuck somewhere? Are they in a blind alley, as they say? And can somebody give him a mic? Mrigank, I would like to you to comment on that. I'm giving you an option.
To begin with, in fact, I would take you way back, not only 3 years, but way back when the entire exchanges started. I do agree. There are 2 points I would like to speak on. One, Mr. Sahai's point on organized and non-organized market, and your point as well about the accountability. See, the entire gold industry in the last 15 years, when the exchanges came into play, has transformed from an unorganized market to somewhat organized market. Today, what we are looking out for is not only the trade perspective, but also the accountability of gold. There is a parallel market running, and we need to identify that. This is identified. Nobody knows what kind of what kinds of gold is imported through that channel. But yes, there is a parallel market running. Second, the most important thing over here is, if you look at the entire chain, value chain of the imports of gold, right from importing to the sale, there are various regulators at various stages. You'll be surprised to know this vaults, the most important piece in this entire value chain, is under the Shops and Establishment Act. So these are key areas that need to be identified. When I say again, it is organized to somewhat organized, is people, local jewelers. When we started the entire exchange marketing way back in 2003-04, it was difficult for them to make them understand this is a platform. You need to come down and hedge. We did the first roadshow with World Gold Council in 2004, when we understood there are 5 lakh jewelers who are not hedging themselves. To make them understand the meaning of hedging also was a difficult task. But today, it's a different scenario altogether. Earlier, it was making them come out from the comfort zone and encouraging them to come on the exchange platform to hedge themselves against price volatility. Nobody understood the risk of rupee dollar. But today, you cannot keep your position open if you have in gold and if your rupee dollar is unhedged. So these are various aspects which they have already gone through. Now they are an educated lot as far as the gold trading is concerned. But now, again, we always compare ourselves with China. We look forward at China, what China does. 2002, when Shanghai Gold Exchange was started, and today it's 2019. We entire commodities started in 2003-04. Today we are in 2019. Look at the London Good refiners in China, and look in India. We have only one, and that's the MMTC PAMP. So we need to build infrastructure. We need to have standards. Standards today, every jeweler will say my gold is better than his, and so we get into that debate always, and we don't know where is the right standard. But if you have proper standard, proper accountability, and proper usage, then we can always build on it.
Thank you. Mrigank, would you like to add to the same question that I had, and what?
Sure. So I think in a lot of ways, echo what Samir said, except that I'm still not 100% convinced that we've moved adequately from being an unorganized to an organized market. Anecdotally, I think if we were that organized, we wouldn't have seen a big impact to the volumes of trading on our exchange when the demonetization happened, right? The fact that during demonetization, almost volumes went to half of what they were is a reflection of what the underlying sector really was trading. But to what we need to do, I think all across, there are two things which I think would be an ask. One is infrastructure, and that starts from what Khoslaji said at the refining side, but right down to where you store the gold as well. To his point that it is in the vault, and we've been pressing, sir, we do request your help to get the vaults now under the WDRA. We've got a regulator. The regulator is doing a good job in the agricultural side. If we can just get all our vaults as well standardized, right? So we just need standardization. We need that across the industry, and we need to build in the infrastructure.
Yeah, as I see it, this thing, it's a mature industry which we are trying to change. That is a difference between us and China. China started off with the exchange, and then the industry grew. They opened the gold industry, put the infrastructure, and then it grew. We allowed it to grow, and it grew very well. It's a robust industry. But we have now developed vested interests, I would say, in various points, and they are feeling that, look, we are doing what we are doing, why should it be? Just before I pass on to Arvind, very important to understand, which we try to say is, the industry has to understand that exports, which they believe or they think is going to increase for India, is so much dependent on standards. Today, the world is talking about ESG, are you doing this, responsible sourcing. China is doing everything right. Even our $7 billion gold imports is at risk if we do not adopt these standards. So there will be a time very soon when your exports will simply stop because you don't have standards. You don't follow any of the international standards. Gold is an international commodity. You can't have a very India-specific standard. You got to trade internationally. And so that's something which is important. It is not just about status quo. It is about the risk of losing the status quo. That has probably not gone in when you say infrastructure and standards, which I think both of you spoke. Arvind, you wanted to?
I'm just curious from both the BSE perspective and MCX, because both of these guys are present over here and already run exchanges, commodities and stock exchange, of course futures as well. Clearly, and I'm now going to put both of you guys on a little bit of a spot, I hope you don't mind. So if the spot exchange comes up, right, and it goes hypothetically to one of you, both of you, none of you, I don't know what is going to happen in the future. But how would you operate this particular spot exchange? What would be the walls that you would put between the spot exchange and the other parts of your exchange? How would you, what kind of regulation do you think would allow it to run in a way that it promotes the integrity of the process, price discovery for people, increases participation, and all of those attendant things? So, I mean, which one of you guys want to go?
Just, we have 6 minutes, so if you can just be brief.
Sure. So, I hope there's nobody from SEBI or RBI here, but because I may be leading them to one part of this. My view is very simple. I think in India, we have demonstrated over the last 20 plus years that we can build good exchange-traded products. So I think with that sort of a track record, what we just need to do is to identify which one is the more appropriate regulator for this exchange, and thereafter create. So if I just take a couple of examples, the SEC, which governs us today, clearly lays out how you differentiate between ownership and governance, right? Who can be on the boards, who can be not on the boards, who can trade, who cannot trade, etc. So there's very well laid out governance already there in our exchanges. I think we need to replicate that with, of course, building in what we need for the gold-related things. I would still say once we identify which one of the two or maybe a new one is the more appropriate regulator, that would set the tone. Beyond that, I think our track record of 15, 20 years is good enough for us to create an exchange which will give independence, which is very important, which will give transparency. And I think all the exchanges are today very well capable of putting in the infrastructure.
the question that you asked was probably whether both the futures as well as the spot exchanges could be run on the same platform. Was that the question? I mean, I think.
How do you
Yeah, yeah.
keep the
Sure. So again, I think they are going to be distinct asset classes. So even today, in equities we run spot and derivatives. They run within the same exchange, but they have a very distinct set of risk management. Their clearing corporation does not allow you to commingle the margins, etc. So I think as long as we make sure that we are not completely commingling these, we treat them as different asset classes, which they are. I think we can still allow them to be on the same exchange, but not really disturb the equilibrium.
Samir?
We have a history, we have a past about the unregulated spot exchange. So the first most important thing is regulation. And if we have someone like SEBI who regulates it, nothing like it, because they regulate the entire financial markets. For us, 140 years of expertise of exchange, transfer and trust, everything put together in the Indian equity markets. We started commodities as well recently, 1st of October. And besides that, we were the first exchange in India to launch the exchange in GIFT City, where we operate 22 hours seamlessly, right from the Japan opening to the New York closing. And it's all dollar denominated contracts. We do at times almost 500 million to 600 million a day in gold tri-ounce contracts. So we have an history. We complete 2 years over there of working in the GIFT City, the India INX. So as a group, as BSE, we have expertise of running these exchanges, 140 years in India, and 2 years seamless running of non-stop 22 hours dollar-denominated contracts on gold. This is one of our flagship contract in the India INX, which was inaugurated by the Honorable Prime Minister 2 years back. So we have a great history. We have shown success there as well. So yes, why not?
Right. I have to just wind this now, bring this to a close. Can I take this? So just one last question, just to bring the bankers. And for those who have come from outside this country, you might have picked up quite a few terms here, WDRA. The fact is, as I mentioned some time back, we have a very, very mature industry, $35–40 billion. It's just gold alone. If you take diamonds, it's $85 billion. It has grown without a regulator, but it has certainly met the, in the context in which it grew, it worked. But in the context that we are going to face in the future, that's where we are discussing a lot of changes. As you can see, once it has grown to this size, everybody has a view. And more so in a democratic country, everybody has two views, actually, depending on which forum they attend, right? So that's where we are. Now, the one important thing, as you can see, I'm not just a moderator, I'm also putting in my views here. One of the things is banking, which has never got involved very deeply into gold. It still does a lot of work, but it is very supportive. There is no bullion banking in India. The point is, it's not just about, again, we have discussed it, it's not just about bringing out the existing 25,000 tons of gold. What I am buying today, we should facilitate it in a manner that I don't keep physical gold at home, which is where the digital gold and things like that come in very, very handy. We have technology today, which at the click of a button, I can buy gold for even 1 rupee, 0.0003 grams. Rajesh Khosla himself is selling that. There are one other platform selling it. Now that again facilitates, because that gold is not kept in my household vault. It is kept in a centralized vault. And once you have it in a dematerialized form, you can use that gold to lend to the jewelers and even make a little more money. Of course, these require very controlled regulations, etc. So it is not just about bringing my past gold, what I bought in the past or what I got from my grandmother, which should come into the system. What I'm going to buy in future, could that be monetized in a way? That's very important. So which means India has a huge scope for gold-based financial products, which the banking industry can run. With the result, they actually give you the benefit of owning gold, but actually hold the gold themselves, which is a much more easier way of probably introducing monetization in a way. I'm sure it's also part of the policy. So with that, I would just like to leave the final words with Arvind and Mr. Rajaraman. And if there is one question from the audience, we could take it, and then we will close that. Yeah, Arvind.
To me, that was a very interesting, especially the last part where I managed to buttonhole two people that I have not talked to before on this at all.
Did you get an answer first?
Thank you for, that's not for me to say. I'll hand over to Mr. Rajaraman.
So there was a talk of the standardization, which I think is very, very important, because in our view, if gold has to flow in a system like say cash or money does, the only way, the path to it is dematerialization of gold. I mean, a very sound, robust, secure way of dematerializing gold. So therefore, I guess this will also enable. I mean, this also therefore requires standardization. And incidentally, the Bureau of Indian Standards is just a few months away from notifying the India Good Delivery Standards, which is largely modeled on the London Good Delivery Standards. So I think this development of the standards, along with a very robust, regulated vaulting infrastructure, should take care of dematerialization in a very big way, I think. And that's going to be one of the cornerstones of our policy too.
Thank you very much. If there is any question, we would like to take that. Yes, there is one person. We'll just take one question because we need to definitely be on time. I have a professor to my right.
Hello everyone. I'm a small retailer from a small town. So my question is for Mr. Rajaraman, that when we're talking about gold monetization scheme and all, so it's related to that we as a jeweler, it's really difficult for us to get the gold metal loan. Bank is very happy to give us 15 million rupees, but when we ask for that 3 kg or 5 kg of gold metal loan, they don't even know what the hell is this. Gold metal loan, is there something like that? They don't even know. So gold metal loan is just for the metro cities or the major towns in India. When it comes to tier 2 or tier 3 towns, banks don't even understand this term. So what the government is doing for that?
So we will be looking at that in the bullion banking session, just for your information. But
yeah,
please.
No, but it's a good question. So this is precisely what I said during my intervention in the beginning, that there is no reliable bouquet of financial products now available for the market, either for the business or for the retail market. So this is largely because of a combination of factors, including the constraint by regulation, and as well as the lack of the market infrastructure. So we believe that the issue that you raised, GML is actually a product. A product as part of the several other products that we propose to launch. In fact, for your information, the GML is part of the earlier gold monetization scheme. It did not take off because of the lack of market infrastructure and a sound supportive regulation. So I think this should be addressed during this phase of reform that we are addressing to the policy. Yeah, so I agree with you. I think it is not there. And in fact, the number of banks which actually participate in the gold monetization scheme is very restricted. And it is even restricted by the number of branches as well. In fact, there are very few branches across the country which offer this gold monetization, obviously because of all these factors: lack of infrastructure, lack of supportive regulation, which we will address.
So on that note, let's wind up this session. Thank you very much. It was very interesting to see that I think many people, including the government and the other stakeholders, are now thinking of gold policy on a much more integrated and system-based view. And if indeed we are able to fill in the right details on each part of the system, we will be having a very good policy in place sooner rather than later. Thank you very much for your attention.
Thank you. I now request Professor Sahai, please, to present the token of thanks to Sri Rajaraman.